Let's start. Should be visible right now. The main page, major market update, in-depth analysis. As you can see, the euro flag and Apple there. So we're going to talk about current situation in terms of micro and macroeconomics and micro. What's happening in the European Union with our currency here in Europe. And later we're going to talk also about the stock of Apple, how it has been performed and how it can get in the future. Please, you have there a disclaimer. Take a minute to read it. As you know, trade and trading involves always a risk we need to be aware of. All right. Also, let me tell you that in case you have registered with your IQ option email, the one you registered when you created your account, you will receive a record of this webinar in about a week, few days. You're gonna be sent to your email as well. And of course, question and answers. We will be at the end answering also during the webinar. Feel free. It's a big pleasure for all of us to have you participating, to answer your questions all together, suggestions, anything you want to say, please use the chat. It's not only me, also the moderators are there to help you. And a little reminder for next webinar that will be on the 27th of January and will be purely about technical analysis. We will explain some indicators, right? Then let's start for the European Union. What's happening right now in the EU? Some sources we got from the World Bank. Nice website, you can check. Very good data, charts that help to understand wider what are the numbers in the EU. Few headlines we have prepared. GDP, gross domestic product. What is the value of the European Union? It's 13.3 trillion euro. All right, 13.3. The USA, it's around 20. We got the EU in 13.3, and that gives us a GDP per capita if we divided that amount by the population of the whole union. In average, each of us, we should get like a above 27,000, 27,400. All right, so this is just numbers to know where we are. Important numbers. If GDP goes up, GDP per capita goes up or down, affects our currency, the euro. Unemployment rate, now you see a red dot there. Not so nice numbers, 7.3 according to October information. High according to the standards of the EU. Still room to improve. Here we have a big difference with the USA. In America, they reached pre-pandemic levels. They are now in below 4%, which is amazing. And compared to US, still we need to improve the unemployment. And GDP growth rate, 2.2%. Here you see a green dot, good numbers. As long as economy keeps growing, we will do. We have a sustainability, means the economy is growing, the economy is working. So good numbers, high or lower, but around 2%, it's okay. Here is the main problem now. Okay, here is the main problem, inflation. If we had a normal inflation rates, this GDP will be good, 2.2%, fair numbers. But we are suffering now a big inflation now in Europe. We need to pay attention. 4.9% according to November. Still, we are missing the December information that will come next week. Probably we will finish above the year. We will finish it about 5% inflation rate. Super high numbers. Tell me, what do you think? Can be enough, or can be balanced to have an economy with a 5% inflation rate? They usually say that a healthy number is 2%. European Central Bank, the Fed, every developed countries, we set the target of our inflation in around 2%. We think it's a healthy number because also the economy, we expect it to grow, and if it keeps growing, then it's normal that prices may rise. it doesn't impact too much the domestic economies. Okay, at 2% every year, if prices in general increases at 2%, which seems like a small number, right? Not that much. In 10 years of 2% increasement, and if your salary, let's say you are an employee and your salary doesn't change in 10 years, but inflation is 2% every year, your equity, your patrimony will be decreased by 22%. And not everybody gets a salary increasement of 2% a year. Not everybody. So now imagine if we finish the year above a 5%, in 10 years, if we keep this rate, imagine we keep this rate 5% for 10 years, in 10 years, prices would have risen more than 50%. You would have lost 50% of the value of your money. In case you do not invest and get a return, in case you do not get a salary raise, if we keep this inflation rate of 5%, you will have lost 50%, more than 50%. The exact number is 62% of your value, of your money value. And that's huge, and that's impossible to keep. And that's why it's so important, price stability. Price stability. The responsible for this price stability is the European Central Bank. And what they tell us, it's transitory. All right, transitory, but we are in high numbers. We have to change it. And so far, no ideas to increase interest rates. Some purchases programs are planned to end by March, by summer. But still, still they are buying more bonds. Rates are almost 0%. That's why I want you to understand how important this is, inflation, not only for trading, but also for our economy, for our situation, for our well-being as a society and as a country. Very important to pay attention to inflation. We need to improve that in the whole union. Few headlines more, Reuters and Europa website. So what I said about the purchase programs, they're gonna end it, which is good news in terms of inflation, but not so good news in terms of growth. Purchase programs, bonds, are very, very related to the growth of the economy, but it's a fake growth because it's new money that enters into the economy, but doesn't come from industry, from production, from company profits. So they're gonna end it in order to stop this big inflation that we have right now, as we are near pre-pandemic levels. We overpassed the COVID crisis. Industrial production up by 1.1% in the euro area, countries with euro, and 1.2% in the whole union, including countries with no euro. So good numbers, it's okay. So at least the production, industrial, the industry is growing in Europe, good. And then here one I marked in like orange, not good, not red. I mean, not good, not bad. It has both views. We expect, according to the European Central Bank, the forecast for this year, for 2022, it's that inflation will continue rising, but it's not related to a growth in the economy. When the economy grows, I can assume an inflation. It's okay. We are growing, more economy, more jobs, more salaries. It's fine if I have a small inflation. I can deal with it. When it's not related to when we don't have economic growth and we have inflation, that we call it stagflation. And that's a bad scenario. Here they say that the reason, as you can see here, it says the inflation is not related to growth, it's related to high energy prices. Have you seen the gas? Have you seen electricity? How much has raised during this year? And because of supply chain problems. All the system that we had before with China, how expensive now is to ship products from China, more expensive than before the COVID. So if we manage to come back to previous energy prices and to fix the supply chain, then we are expected to see as well, according to the ECB, the inflation to reduce. So we know at least what is the problem, and I think they will manage. They will try to fix it, of course, to reduce inflation. So a few more things. Let's see now a bit on the chart. Euro USD, how euro have performed during the year. 2021, euro started at above 120, 123, 122. And now it's 113, 114. It ended the year at 113. Even it reached 112 something. So huge decline, big drop of the euro compared to the USD. Compared to GPY, compared to Japanese yen, an improvement. 1 euro used to be 126 in January, last January. Now it's around 129, 128. So compared to Japanese yen, we have overperformed the yen, but underperformed the dollar. If you have a strong currency, it helps you to buy because you buy cheaper. So it favors your imports, but it affects negatively your exports. So it has both views. If an economy wants to export, better I have a undervalued currency, so all the countries can buy from me cheap for them. I will be very competitive in the market. So this is the difference. This is the main difference. And let's see. It's big drop from the dollar from 123 to 1.13. It's been big. Let me show you something that we did in our last webinar. Last webinar we did about support and resistances only, and I wanted to remind here a little bit what is support, what are resistances. Very important because it's something basic for us in terms of technical. Okay, everybody says I already know what is support and resistance. Maybe it's too simple, too basic, and I forget about it and I look for more complicated indicators. No, it's fine. I mean, support and resistance is widely used, and not only for beginners, it's for experts, for corporations, hedge funds. Support and resistance, not just because it's the basic, means it's something that you can get rid of. No, it's basic and it's important and widely used. Support, guys, support when we have a price below our channel, down the channel, that keeps bouncing back, bounce up. Right, it touches that level and goes up. Okay, there is a price there that the market doesn't allow it to go lower. And then resistance is the opposite. When we have a channel, as you may see here, I may have the price that touches several times, again and again, and comes down to the middle. Right. So this is my resistance. This is my support. Good to keep an eye on it. Good to use it. And can be helpful, can tell you a wide vision of how is the market performing. All right. Here, so let's talk now about Apple. What's happening with Apple? Huge company, huge one. You all know what is Apple. A few sources here: Seeken Alpha, CNBC. One of the biggest companies in the world that keeps growing and keeps controlling the market. There is a well-known sentence from Warren Buffett, this big investor, that say the next big thing, or the top companies from now to 25 years, they will be different. But Apple seems to be one that it's going to be hard to remove it from the top 10 or the top positions. Massive domination of the market, computers, telephone, but they keep growing and they keep selling. So let's see why the price has risen during this year. 14th December, according to few informations here, could hit 3 trillion market cap if the stock gains just 2%, to trade at $182. This is from the 14th of December. We have reached that price. We have reached that price before. I think in the beginning of January, we reached that 182. So it has become the first company to reach 3 trillion market cap. Amazing. 15th December, the current market cap was 2.86 trillion. Nowadays, it's more or less the same because it dropped. It reached 182, 183, and now it's like around 170s. And now here, two important data that will make you understand why Apple has been performing so well. And it's that, every company releases earnings per share, revenues. Every quarter you get a document, a statement from the company of how it's going, how many they are selling, how many they are buying from the providers, from retails, blah, blah, blah. Apple has failed to beat only 2 revenue forecasts. Since 2017, we get 4 revenue forecasts per year. It has failed 2 revenues forecasts. The forecast may be, let's say, 10, and it reached only 9. And that happened only twice. Every time it has beaten the forecast. So really good, and it's not something that common for the stocks to happen. And check this one. Since 2017, has beaten every earnings per share. So even if they have a consultancy company that makes the job for them and see how much earning, how much revenue they expect, they still beat them. And you can imagine how the market gets that information, how impactful is that information. Okay, we make some statistic for Apple and they beaten them. So maybe we are undervaluing this company, and then for the next forecast, we set a higher forecast and they still keep beating it. And this is one of the reasons of the massive improvement and the stock, how it went up and up and up. 13th of December, JP Morgan, very well-known company, JP Morgan financial institution, raised its price target to $210. Right now, as I said, it's 170s. And according to JP Morgan, guys, this information comes from JP Morgan, not from Ishmael from IQ Option. They plan to cross the 200 in the short term. They're gonna release soon the new iPhone special edition, and they see the target to reach that number, $210. So room to get on board, according to JP Morgan. Here, I want to show you more visual, how it looks, this forecast and beating the forecast that we mentioned before. The black bar is the consensus, the forecast, and the blue one is the actual, all right? You see you see that it declines, first of all. We can see a downward trend that seems to stop around here. Of course, this is because of the COVID. Before the COVID, these forecasts and actual were normally up and up and up and up and up. Sorry, before of the after the crisis, of course, every company noticed the situation of the COVID, but still, you see, here is the forecast beaten. Here is the forecast beaten. Here is the forecast beaten. Only this one, it was same, which is already good news to match the forecast. Same with the revenue. Revenue also the same as because of COVID. Here they start to make it more than before, but of course they noticed they suffered the crisis as every company, most of them, and forecast here revenue more, forecast here revenue more, and this is good to keep an eye. If you trade stocks, it's good to know what is the situation. Of course, the ideal will be to have knowledge of both technicals and fundamentals. Not only for currency pairs, not only for if I trade euro dollar, also for stocks, I can have fundamentals. Also for commodities, anything, right? It has its technical vision, but as well the fundamental one, the actual, the real world, right? Not out of the chart. And if I want to trade stocks, it's good to keep an eye on how the stock is performing in terms of its selling. The product that it's selling is useful, or it's just a bubble maybe. Do I trust this company for the future? It's same as, we have many discussions. Tesla, for example, doesn't sell as much as Toyota. No, Of course not. Far from Toyota car selling, but its price in the stock market is way higher than Toyota. But why? Because we expect maybe in the next years that every cars maybe will be electric and Tesla will be the dominant one. So also remember how the market tries to anticipate. And many people say the investors are 3-6 months ahead on what's happening nowadays. Let me show you, please, the chart, how Apple performed in a year. So this will be January, you see. It started the year at approximately 130. And, sorry, yes, it started the year at 130. More downtrend here, downwards, but from here we see that the minimums are getting higher. Very clear upward trend. From 130, it reached nowadays almost 180, 175. It ended the year. This is the price that ended the year at 16th of December. So that's an improvement of the value of the stock. Here you have it, of almost $50. From 130, you buy the stock, you finish the year at 180 almost. In percentage, and maybe this will shake your mind and shock you even more, almost 40% increasement. That is huge. This is huge. Imagine your salary to increase at 40% in a year. Wonderful, right? Imagine you give your money to the bank and you tell him, okay, in a year I will give it to you back with a 40% return. Impossible, doesn't exist. So this is what happened with Apple. Anyone who has placed a part of its money as an investment to Apple has gained a 40%, and nowadays making just a 5%, it's amazing. On a year basis, making a 5% return, I would sign it forever. It's great, very great. So good from Apple, good performance. The stock now, all right, we got 7 days candle. So this is a more vision on the chart, right? But we see the price crossed this, I mean, the 120, rejected here, tried as a resistance, managed to cross it, then came back. So we got a first support at 120. We can see how many touches were happening there. Then the 140 was touched here, retouched again here, finally crossed. And then what it was a resistance became support. So good, it means the price is growing. It tested again this 140, couldn't close it, and up. And now we have seen that that price of 180 has become kind of a resistance. So let's see if it keeps the trend, upward trend. And here we wanted to mark it as well, the JP Morgan prediction, the forecast of 210. So if JP Morgan are right, look how much of space do I have to get on board. Good one. And now we're gonna end with another technical analysis. I wanted to show you also this simple moving average. Many of you may already know about moving averages, and this is interesting. I want to show you 2 different ways to use 2 moving averages. You know that normally many people trade using 2 different moving average, one shorter and another one longer with more periods, a lighter one and a heavier one. A moving average is just an average price of the candle. So depend on the periods. If I take, okay, give me the 20 last periods. So the moving average will be showing me the average price for the last 20 sessions on the stock market. All right, so this is what's a moving average. Pretty simple. This example that I want to give you is for 20 period and 50 period. Okay, this is something that you can apply on your trades, on your chart. Use it in your practice account, in your demo account. See which of these 2 techniques you may find more attractive to use. Look, so we have 2 different moving averages. The red line that you see that it's not moving that much, moving, but not that much. It's because it's heavy. It contains a lot of prices, 50, okay? And this is 1 hour, so I got the prices for the last 50 hours. And the 20 moving average, it got me the prices for the last prices for the last 20 hours. As the number 20 is less than 50, that's why it follows the price more. You can see how the green line follows the actual price, the current price more than the red line. So 2 different ways. I ask for your attention now. Interesting thing. 2 different ways to use moving averages. One of them, I place my 2 moving averages and I wait for a crossover. This is one of the techniques. According to many trading books, many experts, a crossover, when the smaller period crosses from down to above, the heavier, as you can see in this circle, this can be considered as a bullish flag. This can be considered as a bullish flag and maybe an opportunity to enter into a trade. Let's see what will happen here. This is 1 hour candle, okay? If I see this crossing, I say, okay, bullish flag, and I buy. And I will buy here. In this situation, price will go down. I will be on losses. Still on losses. This is few hours, so 1 hour, 1 hour, 1 hour. This is another day, 8th of June. This will be 9th of June. Still on losses. Still on losses. Here it goes down. I will get maybe a heart attack around. Still. If I keep it open, still. Here I will start making profits. 3 days after. So it depends where I place my stop loss, or if I keep it open in 3 days, in this example, using this crossover, here I will start to getting profits. All right. Another way to use the moving averages is the following: not by crossover, but using the crossover as a first step. And I explain you. I get my crossover and I wait. First step, done. Crossover. All right. And I wait. I don't enter the market here. I don't open a trade. I wait for a pullback. I have my pullback here below the green line. You see the price is above the green line, this moving average. I wait for the price to go below the moving average, not the red one, the green one. So here I got few candles. This one starting, it closed below the green line, still below the green line, still below the green line. And now I wait, if it happens, the price to go up, a candle that closes above my moving average. Let me know, please, if you are following me. First step, crossover. Second step, pullback. Only from the green line, not the red one. Pullback. And a comeback above the green line. So here I have it, right? My signal is here. First step, second step. Here I open a trade. Here I open a trade according to this theory. Same price, same price. Remember, this is 1 hour. 1 hour, 1 hour. The second hour, third hour already maybe small profits. And then boom. Now, maybe I close my deal. Let's say I keep it open. Continue. Okay, I'm in profits. I'm very happy, very happy. When I would close this trade according to this theory, when the price fall down again from the green line. If it crosses down the green line, it's supposed to be a stop loss indication according to this theory. So here I close my deal. But what happens? That's why I like this example. The next hour, I got a candle that went up. So this is still an opportunity because I have the first step, it's still there. I mean, the crossover is still valid. As long as this crossover is still valid and we do not go below the red line and the crossover is still there, it's still valid. So what happened next? I close my deal here. The next deal goes above the green line. I can open, according to this theory, according to this technique, a new trade. I open a new trade. Here, red candle, but I don't close it because it didn't go below the green line. I still keep it open and see, boom, on profit, on profit, on profit, on profit. And here I will wait, according to this theory, the price to go below the green line and then close it. Or now it depends on the behavior of you. You know, you can be more conservative. Here already I close it. Maybe here I close it. Keeping it longer, keeping it shorter, up to you. Sorry, Mario, now I see a question. So the crossover is more like a long-term signal, but the 20 SMA is the entry candle, right? So the crossover is more like a long-term signal. Yes, the crossover, let's say, is my first step. If I do not have the crossover, I don't have the rest. I don't have anything of this. Because many experts, and this is from like technical analysis studies, they believe that when this crossover happens, it's a change and can be considered as a bullish flag. So instead, this is a one more touch into that theory, and it's waiting for the pullback. Waiting for the pullback. Yeah, it's a long-term signal. This is like the first one, and then the 20 SMA, the smallest, is the entry. Correct, Mario. Thank you for your question. And according to this theory, it's like, you know, many people ask where I will place my stop loss. Well, if you want to follow like strictly this theory, stop loss is supposed to be when the price comes back, like goes down from the green line. Then that's supposed to be like a stop loss signal according to this theory. But of course, it depends. I mean, you don't have to be. Sorry, take profit. Take profit, of course, and there is no loss. If I open my trade here, there is no loss. I'm on profit, so take profit. Sorry. Stop trading, you know, like an exit point. Thank you very much for helping. Another, yes, that's it. I think it has been clear. Let me know, guys. So these two ways, you know, there are many ways. You know, you can try in your demo account this kind of theories that we check. Open your demo account. Every time that you want to try something new, it's there, your demo account. So why not have a look at it and think maybe you like more. This is not strict rule. You may see situations. Imagine that this price from here starts to go up. We will never have the pullback. So there are situations where this theory will be more accurate, and there are theories where the pullback will be like more accurate. Let's say the crossover, since it's only one step, it's only the crossover and go. Let's say it's faster theory, trading fast. And this second theory that we see with the pullback and the comeback, let's say it's 2 steps. So it's you are waiting for more confirmations. So again, up to the trader, if you like to have more confirmation or just one go. Thank you. Of course, thank you very much. I hope you have liked our webinar. And we will have next one. Remember, it will be mostly about indicators, sorry. Focused on that, no market news, no macroeconomics. Let me finish already this. I think you can, yes. Now it's my face on the screen. Thank you very much, guys.